Happy Halloween. It is Judgment Day in Kansas City with the Bombshell Commission lawsuit going to the jury this morning, or as the plaintiff's attorney called it, the day of accountability has arrived, according to the plaintiff. So the plaintiff's attorney presented a dramatic closing argument while the defense took a more methodical approach, saying the conspiracy claims did not hold up, according to Real Estate News, Dave Gallagher and Austin Alonso. Thank you, Real Estate News and Inman, for providing fantastic coverage of this story from Kansas City. Let's cut to the chase here. The defense countered that no actual evidence of a conspiracy was presented by the plaintiffs, and that does seem to be, except for the bombshell video, the ambush video, with Tom Ferry and Mr. Dalton, there doesn't seem to be at least a written smoking gun that, we are the conspirators, it really spells it out, that says we are entering into a conspiracy. There's no document that like spells it out. But in most conspiracies, there isn't a document like that. Anyways, people usually aren't that stupid. So the defendants are basically saying there's no smoking gun, whatsoever. And the data they present was cherry-picked. Well, of course you're going to pick cherry-picked data. Defense attorneys added that their witnesses were also attacked with no actual proof. They attacked our witnesses. Listen, I think that now that the arguments are over, the questioning is over, the testimony is over, my viewpoint on whether the defendants are going to win or not, I think has shifted a little bit more, not entirely in the defendants' favor. I still think the plaintiffs will win. But I think the defendants have done a fairly good job at defending themselves. And I don't want to call it 50-50. I still think the plaintiffs will win. But the odds of the defendants getting off here, I think, have gone up a little bit. I think they've done a fairly good job. I don't think it will be enough. Remember, it's a fairly tall order for the plaintiffs. When you get down to the instructions here in this $1.8 billion class action lawsuit, during the deliberations, they will have to be filled out a ballot containing the 5 questions which go to the heart of the case. Did the plaintiffs reasonably prove? So that's not beyond, that's different than in a criminal trial, different. Their case that the defendants were part of a conspiracy to keep commissions inflated. In a civil case like this, the burden of proof is lower than beyond a reasonable doubt, which is typical in a criminal trial. However, the jury must reach a unanimous decision according to the jury instructions. So it's a tough row to hoe for the plaintiffs with this jury. But then again, we've been looking at this from people that are, in the industry. And, I'm a real estate broker in Massachusetts. You're probably a real estate agent or broker or investor someplace else in the country watching the show. Good morning. Thank you so much for watching. Bushy, thank you so much. Very nice to hear from you. Appreciate that comment. We've been watching this, and we're not objective viewers. The simple fact of the matter, the jury's made, I think, of 8 people. The mom that had the newborn, I think she got excused. 8 normal people. 8, school bus drivers, insurance agents, firefighter, normal walks of life people, probably a retiree or two, regular people. And the simple fact of the matter is they're not unbiased either. They've gone through life, probably selling a couple of houses somewhere along the way. And the simple fact of the matter, the real estate industry does not share the same type of, how do I want to say this, impression upon the general public as do, say, firefighters or, those types of professions. We're down with used car salesmen, congressmen, stuff like that. And so I think the general public is pre-inclined to believe that there might not be a singular set commission, but there could be a range of acceptable commissions. which I think is something to keep in mind here as we go forward. And that's once again why I think the plaintiffs have an upper hand. When you look at the coverage from Inman, in this situation, Gary Keller from Keller Williams testified the other day. He was played a big role in this trial. He had a video testimony via deposition. He testified in person. And then yesterday they played a video of him at one of the Keller Williams, what do they call those things? Family reunion things. And it's kind of like their national convention. And which he said he was okay with, and he liked the average commissions of, on the seller side, 2.6, and on the buyer side, 2.7 between 2002 and 2019. If you know anything about Keller Williams, I don't want to call it a cult. I think that's wrong, but it's certainly a cult of personality. He has a tremendous following, but it is kind of pyramid schemey, isn't it? Just a little bit, just a teeny bit. With their whole comp plan, goes 9 levels, kind of multi-level marketing. It is a little bit. And when Gary Keller says he's okay with and he likes something, I'm pretty sure that's code for keep doing that in the Keller Williams lingo, right? I'm pretty sure that's what that means. We're not talking commissions here. We're just showing averages, he says in the video. Which is kind of an admission that, or at least it's an admission that he's walking right up to the line, but he doesn't want, it's kind of like, I'm not talking commissions here, wink, wink, right? Okay, sure. The only time commission rate has been above 3% was during the Great Depression. That's interesting. He said the slides were events for perspective to explore issues in the economy. There's nothing you can take from this. There's nothing competitive about it. Okay, Gary, so why'd you say it? Anyways, when we're looking at this trial with a biased look, as most of us are members of the industry. Good morning, Sharon. Bushy says that it is, maybe I just pulled this up put this quote up on the screen here. Bushy says that that Keller Williams is kind of cultish. Well, I don't know. It is. It's got some factor, by the way, of it. By the way, hey, thanks very much. Better reporter here on this channel than Inman. Thank you, Bushy Top 08. Thank you. Appreciate that. Let's go to Inman because they did a survey when we were talking about bias. And last Friday, they surveyed their readership. And most of the readership at Inman side doesn't think that the case was made. 69% of you said the plaintiffs have not cleared the bar during the trial. 22% said they have not shown the proof of conspiracy. The remaining 10% said they don't know. So, in any poll where you've got at 90-something% of people have an opinion, that's a lot, I guess. Of course, this is, totally unscientific poll, by the way. But 69% believe they haven't cleared the bar. Have they not watched that Dalton video? Because remember, the people that are making the decisions here are normal, everyday people. Maybe a higher percent of renters than anything else. So, yeah, something to keep in mind. Also, keep in mind that the trial that we're talking about here is $1.8 billion of potential damages. Remember, there is another trial around the corner, probably early next year. They're seeking $13 billion. That's like 6 times as much, right? And that is Morel versus the National Association, etc., basically against big real estate. And that is coming in the springtime. I've had a lot of fun making the thumbnail. I don't know what I'm going to do for thumbnails once this trial's over, because I've had a lot of fun making these legal thumbnails. Today, of course, came wicked easy. Devil's Advocate, because it's Halloween, right? Keanu Reeves with Al Pacino, made the little font in orange. Really easy to make this thumbnail, a lot of fun. But let me just be the devil's advocate for a second. And notwithstanding all the time that we've spent on this case and that the real estate industry, news industry has spent on this case, let me just tell you why it's not important as much as, maybe proportionally we've been focused upon it. And that is, number one, the industry as a whole has already caved on the principle, as we've mentioned before, where now 0% commission is now in compliance with the cooperation rule, right? Or the coopetition rule? Is it the coopetition rule? It could be the coopetition rule. So 0% is now acceptable, which, $1 was acceptable. But as we also know from Northwest MLS and from the silence coming out of the Mid-Atlantic states at Bright MLS, we also know that making it 0 is a distinction without a difference. It doesn't matter from a policy point of view, from an on the ground, on the market point of view. Sellers are still paying the normal commission. Air quotes on that. Remember, I'm not a member of the Realtors, so I'm not one of the alleged conspirators. Maybe you are, but not me, because I'm not a member. Remember, I'm also not an attorney, way too smart to go to law school. So keep that in mind that, I totally lost my train of thought, but you get what I'm trying to say, is that there's more to come, and that this lawsuit maybe doesn't really matter that much because A, they've already caved on the principle, and B, it could be just a matter of whether or not how much they may or may not have to pay. There are two other things that are going on right now that's going to make this case that is going to go to trial, going to go to the jury this morning, not that big of a story. These things are going to be bigfooted. This case is going to be bigfooted by the Morel case in the springtime and the potential Department of Justice / FTC intervention. And I'm sure we're going to get Department of Justice intervention in this case. So when this case comes out, I'm sure we're going to get DOJ intervention in it. They already intervened in the case here in Massachusetts, no select MLS PIN, which is definitely a sideshow case with only $3 million in damage. And DOJ, this whole drama is going to be bigfooted by the Department of Justice, the FTC, in the Morel case. All right, so let's take a look at the market, my new favorite real estate website, Resi Club, with Lance Lambert, former of Fortune. Housing recession is back on. Wells Fargo and Goldman Sachs agree. Rising borrowing costs stand to trip the housing sector back into recession. When we talk about a recession, by the way, we should actually talk about what that means. A recession does not necessarily mean a drop in price. What it means is a drop in investment, and also a drop in overall transactions or activity. So very, very important to understand what that means by a recession. The recent run-up in mortgage rates, with the average rate now almost 8%, means taking into account rates, incomes, and homes prices, October 23 will go down as the least affordable month for U.S. housing this century. It seems like every month we have a new record on that, every month. I think that was the same was true for September. It will probably also be true for October and November. In the eyes of Wells Fargo, that means housing activity will continue to contract. Oh boy, that's if you're a real estate agent out there, this should be concerning to you because, of course, you get or you earn part of the, if the pie is shrinking, you should be concerned about that, right? You should be amping up your social media presence. After perking up at the start of the year, nearly every facet of housing activity shows signs of relapse as the Fed has maintained a restrictive policy. Mortgage rates have breached 7%, and we fell below $4 million units on an annualized pace. Remember the housing number came out. Mike Zuber was very happy to finally see his prediction come true, under 4 million units at 3.96. Which is the lowest sales pace since October 2010. Remember how many houses were for sale in October of 2010? For sale signs, they were sprouting up. They were like daisies on my front yard. They were everywhere. Now you can't find a for sale sign, right? You can't find. By the way, you'll notice the for sale sign behind me is gone. That's because we got another listing. And I'm happy to say we got our commission check from Friday's closing in the mail yesterday, and we have another closing tomorrow. In September, Fannie Mae Home Purchase Sentiment Index reported that 84% of consumers were pessimistic about home buying conditions, a new survey high. Single-family construction has not yet turned down. Oh, Jack, why has single-family construction not turned down? Because there's such a lack of existing homes to sell that new home builders are filling that gap. And once they do fill that gap, you would imagine that new construction will start to slow. In fact, the home builders index has recently declined, suggesting a new construction may begin to slow as soon as they fill the gap from there's no existing homes to sell effectively, unless they're at our agency. So you've got to keep in mind that for next year, especially if you're an agent out there, what are you going to do to get business? And if you're not currently thinking about at least two things from a content point of view, number one, becoming the number one content supplier for some niche for which you love and you have an audience out there that loves it. I don't care if it's bird watching or pickleball or whatever. If you become the source of information for something, whatever it is, and that people could become aware of you, they know you, they like you for whatever you're covering, and preferably that it has something that you can report on either on a daily or semi-weekly basis, something that routinely changes. You can have a following. You can then monetize that following. I don't care if it's about pickleball. You can now monetize that following for real estate. Or you can just buy advertisements and go broke. Your choice. Also, you should predominantly start focusing your content on sellers. Because if you haven't noticed, there's a risk that buyer commissions might be reduced and or go away. So it makes, now more than ever, it makes more sense to market towards sellers. If you do those two things and start thinking about that and start executing on that, I think you'll be in a much better position for 2024 and beyond as an agent / broker. Gotten a lot of comments over the last couple of days off the real estate channel about, how should I say this, about the commercial real estate market. Two comments that I can think of. I think I had four, actually, but two that are sticking in my mind. And I want to play this piece from CNBC that came out the other day about commercial real estate. Let's play.
Sort of. This time, the New York Times. Technology workers walked out for half the day because they say the company is trying to force workers back into the office. Employees have been in union contract negotiations with the company for more than a year. They say the New York Times is stalling on the deal, and maybe here's the real kicker, hurting their ability to work from home. Maybe just the latest example in the return to office reckoning. According to Castle Systems data, 50% exactly of offices are occupied in an average of the 10 major metro areas. Some, like in Texas, much higher. San Francisco, New York, D.C., a little bit lower.
Wow, that is amazing. 50% of offices are back to work. That is amazing. So last week here in Boston, we saw a property sell, a fairly nondescript, it's not a signature property, sell for 53% of its prior sales value. So this is a office in the Leather District, which is right next to South Station. If any of you happen to be aware of where it is, we'll show you in a second on the map. And it sold in 2015 for $20.7 million. $20.7 million. Last week, it sold for $11 million. 53% of its prior value. Shocking. And here it is here. So it's right downtown for those of you who are you're not a Boston person. It's right downtown near South Station, right downtown. It is not a signature property. It does have a nice new lobby. I've been in this building a couple of times. It's right around the corner from my Boston office. But it's, just your plain McBuilding. It's nothing super special. It's on a street of similar buildings in this neighborhood here. You can see there's dozens of them. And it's selling for 50% of its value from 2015, basically half price from 2015. There are probably scores of buildings like that in Boston and certainly across the country. Let's go back to CNBC.
We've been talking about it a lot. What does it mean for commercial real estate? Well, let's bring in billionaire real estate investor Don Peebles, founder, chair, and CEO of the Peebles Corporation. Don, it feels like the recession that has never come. People have been calling for it for 2 years. It hasn't happened. People are waiting for this commercial real estate reckoning. It has not happened. Will it?
Yes, it will. Absolutely. By the way, think of the concept. People are resisting going back to work. Now, that's amazing. They don't want to go back to their offices. But the reality is it's already happening. The commercial real estate market is already suffering. You have major investors and owners giving back their office buildings to their lenders. It's been a quieter process, but it will accelerate even more as time goes on.
And you have seen that, like, for instance, the big mall in San Francisco, right across from the cable car stop, they just gave back the keys. Oh, sorry, we're just going to default.
And so I think that we'll see a much greater time of reckoning as we get into the first and second quarter of 2024.
What will that look like?
It'll look like first of all, office building values are plummeting already. So I'm in Los Angeles right now. So for example, here, office buildings have lost 60 to 70% of their values right now. Washington, D.C. has been decimated. Office buildings are selling by their lenders by down 30 to 60%. And so,
which is what we just saw with that Boston office building, the fairly nondescript office building on South Street. Is that South or Lincoln Street? One of those two.
It's going to keep happening, and it's going to look like a decline in values. And then some of these buildings will be ripe for conversions. Others will ultimately get demolished and redeveloped to some greater use as time goes on. But also adding to this problem are high interest rates as well.
High interest rates are a huge problem, but also this is going to ripple through for tax revenue, because eventually if all of these properties are selling for 30 to 60% off, then you can't assess them at the same value that they were assessed at before. So this is going to be the spiral. It starts like the death spiral, because if you're a tech worker and you write code, why do you have to go to the office? Remind me again. You should move like the advice I gave you the other day. If you're a young person, you should probably move to a no income tax state, to some cute little town somewhere in Texas or Tennessee or something, and become an entrepreneur over the internet. That's the better play, rather than working in one of these high cost locations, Boston, New York, San Francisco, LA. Why do that? Doesn't make any sense. So I think there are going to be a lot more buildings like 186 Lincoln, like this building here, that are going to sell for way less than what they were previously, or they'll just foreclose, because so many of these have to be refinanced as well. We didn't talk about that, but he was just that guy there, Mr. Peebles, who I'm guessing he's probably positioned to make a lot of money because of this downturn. He's probably shorted it in some way. A lot of these buildings need to be refinanced. All right, so Redfin thinks that they know what is keeping mortgage rates high. So Redfin, poor Redfin, they go and they write this article that tell you the 3 bullet points of why they think mortgage rates are high. Several economic indicators point to still overheated U.S. economy that merits higher rates for longer. First off, it's the GDP in the third quarter, which has actually a lot of one-time third quarter numbers in there. So this 4.9 number from the GDP, well, it's a huge headline. I don't think that's going to be sustainable or repeatable in the fourth quarter. Just my 2 cents there. They blame things like Taylor Swift's concerts and the Barbie movie. Now, I got to admit, I have a 17-year-old girl, so I'm probably contributing to the economic activity relative to Taylor Swift. but it's not Taylor's fault, right? This is not Taylor's fault. Neither is the Barbie movie. I skipped the Barbie. I watched the Oppenheimer movie. Inflation is staying high. These are symptoms of the problem. The labor market is strong. Symptoms of the problem. Finally, in the 8th paragraph of this Redfin article, do they finally figure out that, inflation could be caused by increasing supply and slowing demand for government bonds? It just happens to be, according to Redfin, it's just another factor pushing the 10-year treasury up. No, it is the factor, Redfin. This should be the first paragraph in this article, not the 8th. Because U.S. tax revenues unexpectedly, they were unexpectedly fallen. The Treasury needed to borrow some more money, and they borrowed it using long-term debt, 10-year treasuries. Hello? 10 years is not long-term debt. 30 years is long-term debt. 10 years is medium-term debt. Hello, Redfin. Get it right. That with an ever-growing government spending means more treasury supply. In other words, more borrowing. Meanwhile, demand for treasuries is lower because investors, including China, are pulling back amid uncertainty around the economy and bond markets. Okay, Redfin, so you did get the answer right, but it took you to the 8th paragraph to figure out what's going on here. It's our borrowing through Congress's way overspending, and it's the Fed through its money printing that is devaluing the dollar and hiking inflation. This is basic economics that if you took in high school / college, 2 or 3 basic economics class, this is simple stuff. This is not some type of sophisticated econometrics model. But thank you, Redfin, for finally getting the answer right in the 8th paragraph. Where are interest rates? 7.92. 7.92, according to Mortgage News Daily average yesterday. They've been over 8, and then they've been in the 7.9 range now for several days. In fact, if you look at the 10-year treasury over the last week, it hasn't moved much, if at all. It's been in the 4.8 to 4.9 range for a week. There hasn't been a lot of movement. Of course, at 9 o'clock this morning, we have the Case-Shiller Price Index number, which I thought was last week, but again, it's today at 9. And that is August numbers. Those are August numbers. So while I'll be very interested in it, and we'll cover it in tomorrow's show, remember, if it's August numbers, those properties went under agreement like in June. So the market that we're looking at now in November is much different than what we had in June. And then, of course, tomorrow we have the JOLTS report, I believe, and the Federal Open Market Committee, and Powell speaks tomorrow. So those will be interesting things to look at for tomorrow. Hey, I want to thank my Facebook audience for joining us today. We'll be back tomorrow at 8:30 a.m. You have a great day. Go make some money. Bye-bye.